As a business owner, you dedicate your time, energy, and capital to building your company and taking care of your team. You've poured everything into establishing your business, creating your brand, and securing your place in the market. But it can only take one unforeseen event to threaten everything you've worked so hard to establish. If you own a business, you almost certainly carry property and casualty insurance. And that's a good thing. While most owners know they have a policy, far fewer know exactly what it covers, what it doesn't, and where the limits are. So let's dive into the basics. P&C Insurance does two jobs. The property side protects your physical stuff, like your building, equipment, inventory, and furniture, against events such as fire, theft, and certain kinds of damage. The casualty side is really about liability. If someone's injured on your premises, or your business damages someone else's property, this is the coverage that responds. For most day-to-day risks, it does exactly what you'd expect. The trouble is, business owners often assume insured means covered for everything, and that's where the surprises happen. For one, standard policies come with exclusions. Things like flood and earthquake damage are typically not covered by a standard property policy. Those require separate coverage. Liability policies have their own gaps too. Claims involving employee lawsuits, employee theft, professional errors, or data breaches usually fall outside a standard policy and may require specialized coverage such as employment practices liability or a cybersecurity policy. These can be the most frequent and expensive claims an employer actually faces. Then there are limits. Every policy has a maximum it will pay, and a serious claim can reach that ceiling faster than you'd think. Actual cash value includes calculations for depreciation. So a claim on an old roof or equipment might pay far less than replacement cost, a meaningful difference at claim time that many don't check until it's too late. Even where coverage exists, the limits may not match the exposure. A $1 to $2 million general liability limit sounds like a lot until a single serious claim exhausts it. Plenty of businesses carry inadequate limits without ever realizing it. There are also sublimits, which are smaller caps buried inside the policy for specific categories, and these sublimits can quietly leave you with less protection than the headline number suggests. None of this means your coverage is wrong. The details of your policy just deserve a closer look. The best move any business owner can make is to ask the simple question, if something happened tomorrow, what would this actually cover? At the GTM Insurance Agency, we can help you answer that question. We'll take an educational, consultative approach, starting by understanding the unique vulnerabilities of your business, operations, and industry. You shouldn't have to wait for a disaster to find out if your business is truly secure.